Hi, everybody. It's Shannon from AlphaTrends.net. Today's Friday, July 11th, 2025. We had kind of a mixed bag for the markets this week. The big news, of course, was the crypto space. Bitcoin gained 8%, Ethereum 16.5%. So let's take a look at these charts and make some sense of it, as I like to say. We'll start out with crypto because Bitcoin had broken that pattern that we were talking about previously of these lower highs and lower lows and replace that with the higher high here and the higher low there and really talk off nicely. I've been telling you for the last 2 weeks that I was 100% invested in my crypto account. I did sell a little bit of this today just to take a little bit of profit in Bitcoin. I've got a bid in down here for to replace it down at about 114,750. Maybe I'm trying to be a little bit too cute, but I'm a trader. This is what I do. So I had also sold a little bit of Ethereum yesterday over in here and used that money to buy some XRP in this same area. So that turned out to be a nice swap out for some Ethereum for the for Ripple here. Anyways, this one is now moving very nicely higher. They're all getting a little bit extended, but these aren't stocks. They trade a lot different. So it might be that I gave away some of Bitcoin today. Who knows? But that's a nice run, and I'm always of the belief you sell a little bit into strength. You sell when you can, not when you have to, and raise your stops up. So that's where we are with crypto. As far as the equity markets, we're getting a little bit tired here. You can see that these moving averages, the 5-day moving average, we're turning yellow in here, meaning that we're seeing the 5-day moving average is starting to decline. We're still above them, but they're just feeling a little bit tired overall. Let's take a closer look here on TC2000. As we know, we're still just a couple days off of all-time highs here, so there's nothing at all to look at this and say that you should be bearish. That's not my point at all. I've made the point, I think, on Wednesday that we want to be cautious because we're starting to slow down a little bit, maybe testing that 5-day moving average a little bit too often. Next week, if we break below this week's low, I think your first level of interest is if we break below 620 and a half, then we get stuck below the 5-day moving average. Let's say we do something like this, then I think that would pave the way for a little bit deeper pullback, maybe even go all the way down to test the breakout level and the rising 20-day moving average in near about that 612 level. So it's not a call for bearishness, it's a call for caution and to just be aware of where you are with individual stocks and what you want to look at in terms of risk management, because a lot of the big names like App, typed it in the wrong spot, APP. For some reason, why is that not showing up on this chart? Very strange. APP, there we go. It's just not rallying the way it's supposed to. CRCL gave back all of those gains. And by the way, if you joined me on Sunday night, you know I was calling for it to rally up to the anchor from the all-time high. And then we broke down through the anchor from this low. So sellers are back in control there. I put CoreWeave on Twitter today saying this is a likely area. There's a level of interest for it. This is the 50-day moving average. That will catch up on Monday or Tuesday. But right now, where we are with CoreWeave is we've got the anchor from this breakout right here. If we also take a look at the Fibonacci from the low to the all-time high, we're right there at about that 31.8% retracement. If we continue lower, then we have to look at the anchor from the IPO, and that would bring us down to about the 110 level, which is also a 50% retracement. So I'm not looking to buy this dip because if we look even at a 5-minute time frame, there is zero evidence the buyers are interested in taking control here. We were below the daily volume weighted average price all day long, so that said, don't be a buyer here unless you want to lose money. Anyways, back to the Nasdaq. The Nasdaq is feeling a little bit tired, and it could be just digesting these gains through time. This is the week to date volume weighted average price. We closed right on it. If we drop down, 550 is probably, I wouldn't be surprised to see if we drop down, we rally up like this, and then maybe we roll over for a bigger move down towards that 20-day moving average also. That would be at about 545 in here. So just be cautious going into next week. The Russell 2000 had a nice week as well. For the week, this market, actually it was, is that right? Let me take a look at that again. The Russell 2000 was down 62 basis points this week. And we are now at a flattened out 5-day moving average. So maybe we're due for a little bit of profit taking. The ideal scenario would be it pulls down to the breakout point right here and tests that along with the 20-day moving average. Semiconductors, they remain resilient. They did have an up week, up 1.35%, and a beautiful pattern of higher lows here pretty much every day of the week besides Monday. So back above that rising 5-day moving average, or still above that 5-day moving average. This group continues to be a leadership group. And if we drop down, keep an eye on the month to date volume weighted average price is your first level of interest that has the potential to become support. And biotechs did have an up week here. They're rallying straight towards that 200-day moving average. I still think that they're a difficult trade, so I didn't get involved in them at all and don't feel any regret for not being involved in them. Bonds, they just continue to be a disaster here. They tried to rally, but with a declining 5-day moving average, we don't trust these rally attempts. If you did trust it, then you got an opening surprise here this morning and continued selling. This market is below the anchor from the low, telling us that on average from the lowest point this year, the sellers are in control from that point. So bonds are not behaving well. Keep that in mind. Energy names, they're creeping back up in here. So I don't trade them. They're a difficult group to trade. Some of the leader stocks, Amazon continues to show a nice pattern of higher highs and higher lows. Apple still having trouble in here. This was we were looking for supply up in this zone. That's where I took a profit over here, and we've just kind of spent the last couple days building maybe some energy for next week. So I'll keep an eye on that one, but I have a little bit of difficulty trusting this one with it still stuck below that thick blue year-to-date anchored volume weighted average price. Tesla gained back some ground, but still closed lower on the week after that big Monday gap down. It's a choppy mess in here. We're coming into this prior little band of support. Support broken tends to act as resistance. That's also the anchor from the election, the orange line here. So that kind of tells us the sentiment of this stock versus Elon's relationship with Trump, and that's souring, of course. But this is a level 320-ish where it's likely that this prior support will act as a place where resistance is found unless something major happens with the company. Nvidia, monster move in here, up at all-time highs today, getting a little bit stretched. So if you're a swing trader, be aware of the definition of trend, and your higher high, your stop goes underneath a higher low. Your stop doesn't go 3%, 5%, or whatever random percent away. Use the definition of market structure, trends, higher highs and higher lows. Meta took a little bit of a breather here today, but still in a beautiful uptrend, riding that rising 20-day moving average. AMD still powering higher. Coinbase, of course, is going to get some strength whenever you see Bitcoin rally like that. It had a nice move past that resistance that we spoke about last Sunday night. So that'll do it for me. I hope you had a good week and enjoy your weekend. Thank you.